Hi everybody, this is Giovanni with Remax Results. I'm here today with Rachel Clark from Firehouse Mortgage.
Hello.
And today we're talking about loans, different types of loans that are available for the consumer, for buyers. I'm always emphasizing that I take care of my clients, so I'm bringing y'all one of the best loan officers in the area. And she's just going to tell you a little bit about what types of loans she has. And let's start off with VA loans. Tell me a little bit about VA loans, what they are, and who they're for.
VA loans are for veterans, active duty, and reserve members of our military. It's earned benefits based off your time in service. The benefit of this loan, though, is there is no down payment. So those consumers get to come to closing with just their closing costs, which could save them quite a bit of money, honestly, depending on the price of the home they're purchasing.
Awesome. And right now, closing costs are it is a great option that we can actually get the sellers to cover those. So if you get a VA loan, if you're a military person and you get a VA loan, and then we get your closing costs covered, you come to the table with very little money, probably even nothing to the table. Additional to VA loans, I know they also have different products, FHA and conventional loans. Just tell us a little bit about what those are and what are the requirements and maybe the down payment options for those.
So with conventional loans, those are usually for better credit borrowers, and down payments start as low as 3%. You can go up as high as you want on a down payment for those, and most people though want the lower down payment. FHA is typically for first-time home buyers, lower credit situations, but can be for repeat home buyers. The down payment on FHA starts at 3.5%, so it is a great option for a low down payment.
Awesome. Well, additional to to your down payments, I mentioned a little bit about closing cost. Tell me a little bit what all is involved in closing costs. What is the actual cost of the purchase of a home, and what's the money going towards?
So we tell our client closing costs are going to be roughly 2.5% of your purchase price. This is just an estimate based off of what we've seen in our experience. But closing costs are comprised of the loan cost is the first part, which is going to be if you have to buy down your interest rate, the cost of your appraisal, credit report fees, things like that, plus your title fees, which is the company that issues title insurance to make sure somebody's not going to come back in 10 years and say, oh, that's my home. So those costs are part of your closing costs. And then another big thing is your escrows. You have insurance and taxes that you have to pay. Insurance, you'll pay a year up front and then a few months into your escrow account. And then for taxes, you're going to pay some into your escrow account. The number of months you pay into your escrow account, though, is going to be dependent on the time of year you close and when taxes are due for that property.
Awesome. I know you mentioned a little bit about escrow accounts, and escrow accounts is pretty much like a savings account that holds your taxes and your insurance. So whenever they are due, you're not having to scramble to come up with the money. The bank is taking care of those bills, the taxes and the insurance. So awesome. And I know I mentioned that you're probably one of the best lenders around town. But what makes you different from other lenders? What makes you special? What would get somebody to come to you instead of somebody else?
So here at Firehouse, we think, one, our service is great. Giovanni and his clients can let you know how we've worked with them in the past, but also we're a mortgage broker. So what that means is that we take your application and we run your credit, but then we go do the shopping for you. We will look at different lenders and different options that we have based off of your specific scenario and tell you what the best option for you is. Now, the benefit of this is you don't have to waste your time filling out 10 different applications to get different quotes from different lenders. We're going to do that for you and give you your options of if you want a conventional loan or an FHA loan or another type of loan, what the rate's going to be, what the down payment's going to be. We're going to give you those options with just one simple application. Also, we're a fireman-owned and veteran-owned company. So being said, we have a deep heart for those groups in our community. We love our first responders and we love our military, and we pride ourselves on helping those people especially get back into homes. Now, that's not to say if you're not a fireman we won't help you. We love helping other people in our community as well.
Awesome. So I deal with a lot of first-time home buyers. What is something that you have? I know you have FHA, VAs, and all those other loans, but what specifically do you have for first-time home buyers, people that are new and don't have a lot of knowledge and maybe don't have a lot of money for the actual down payment?
Absolutely. Can offer here in Harris County and in the city of Houston some grant programs that will allow you to cover that down payment and possibly some of your closing costs. Some of the grants are up to $30,000, and if you qualify, then you can put a larger down payment on that house, so you may be able to get into a home you love without a lot of money out of your pocket, and then you become that homeowner that you want to be. We also work with some lenders that offer a down payment assistance program that will cover the 3.5% down payment on an FHA loan. This is also another great option if you don't live in the Harris County or Houston area, that we can offer you to help cover that down payment. The assistance is only 3.5%, but with closing costs covered by a seller concession like Giovanni talked about earlier, plus a 3.5% down payment assistance, then you might not be able to come to the table with anything. The earnest money you put up at the beginning could be all that you have to put into that transaction.
Awesome. Well, I know we've talked about loans and first-time home buyers, people that are actually looking to purchase a home right now. But what about somebody that already owns their home and they purchased maybe a couple years back? What options do you have for them to save money today?
So we have options to refinance you. Just like purchases, we also can shop you around to different lenders and find you the best option. For those people who maybe took a higher interest rate to get into the home because they really wanted that specific home, then we can help you lower that interest rate and possibly lower your payment. Some people get a little scared though and say, well, I've been paying on my loan for 4 years. I really don't want to start over at a 30-year mortgage. That's awesome, because we can offer you a 26-year mortgage. So then you don't lose those 4 years that you've paid already. We can help you lower your rate and also, not have to start all over. So that's a great option for some people.
Awesome. And just to clarify, sometimes it is not a great option for you to refinance, but coming to an expert and getting that professional opinion on that aspect is going to be able to give you the knowledge you need to make the decision if you can or can't. Because if you purchased a year ago or 2 years ago when interest rates were very low in the 2s or 3s, and you're coming to refinance right now when they're in the 6s or so, it might not be a great time to refinance because you're going to get a higher monthly payment than what you already had. So all that information, all that can be addressed once you come here and, they give you the honest and actual information regarding your specific loan and your specific credit and all your specific situation. So that might vary depending on person to person.
That's absolutely right. He makes a good point. Some people though are looking for like a cash out option. They've been paying on their home. They have a lot of equity. Values have gone up as we've all seen, and they, need some cash for paying other debt off, or, they really want to remodel on their home or something of that nature. Well, we do have that option as well, that you can take some cash out of your equity of your home if you're willing to take that higher interest rate. That's another option that we can explore if that's what you're looking for.
Awesome. So we've talked about loans and closing costs and other different aspects of your home buying experience, but I know a very important thing for everybody is interest rates. With the new start of 2023, how are interest rates doing right now?
So far, interest rates are coming down. I know last year a lot of people got really nervous. Interest rates started climbing probably mid-year, and it never seemed to end. Well, the good news is so far this year they've started to come down. So that being said, we can get you a lower rate, or we can get you some credit maybe for a higher rate that you're okay with taking to get that credit to cover the closing cost. That's beneficial in some situations. If you have an agent who got you a lot of seller concessions like Giovanni, then you can use that seller concessions to also buy down the interest rate and pay that fee with the seller concession, so you can get a lower rate than what is a no cost rate.
Awesome. So tell me a little bit about this buying down the rate. What exactly is that, and is it beneficial, not beneficial?
So that's a hot topic right now. You hear a 3-2-1 buy down, a 2-1 buy down, a 1 buy down, and a lot of people, they just maybe don't understand what it is. So what the situation is say you get $5,000 from the seller as seller concessions towards a buy down. What that's going to do is they're going to take that $5,000 and cover the mortgage payment for 1, 2, or 3 years proportionately based off the rate that you get when you close. So for instance, say you get a 7% interest rate this year when you close and you do a 2-1 buy down. For the first year, your payment that you would pay would be based off of a 5% interest rate. And the other percent coverage is coming from that seller concession. It's gonna go in like a savings account and just make that payment difference for you. So after the first year, you're gonna go to a 6% interest rate. Yet again, that savings account is still gonna cover that difference in that payment. That third year, if you have not refinanced by that point, would be at the 7% interest rate that would be on all your closing docs, and you would be required to make that full payment by yourself.
Awesome. And then from my knowledge, you can also just buy down the rate to a fixed rate that will stay fixed for the 30 years. Is that correct?
That is correct. You can also just do a permanent rate buy down, which is I'm going to use $5,000 and just buy down the rate as far as I can go. And then I get to keep that rate for the 30-year mortgage, if that's what you choose, or until you refinance or sell. The benefits are there for both sides. It depends a lot on how long you plan on keeping this house. Is this going to be your forever home, or is this just maybe a starter home that you're going to sell within 5 years? Sometimes that buy down, the permanent buy down for 30 years really isn't worth it if you know you're going to be selling this home in 5 years. For the temporary rate buy down, like the 2-1 buy down, that money is in that savings account like I talked about. If you go to refinance, you just get that taken off the balance of your loan. So there is a benefit to that if you do refinance in the first 2 years when you still have some money in that savings account.
Awesome. Well, I want to thank you for your time and explaining a lot of these topics for us. And please reach out to us if y'all have any questions regarding loans, interest rates or anything like that. And as well, we're here to help you answer any questions that we have not answered on this video. So thank you again for watching. You have a great and blessed day. Bye.